Let's start the recording. Okay, thanks for joining the webinar on seeded acres and the changes that we've seen. Now, some of this chart may be familiar to some of you that looked at it last year, as last year I basically did from 2006 to 2011 and did using my database, just taking my numbers as to how things have changed. Of course, now this year that I've met with everybody, there's just one person left to meet with, so it was time to do this. With meeting with everybody, I could basically again go through what the changes are, and the big number that really jumped out at me. And this is something I hesitate on doing until I actually meet with everybody. So I kind of get a feel when I sit down with you guys, whether it's third week in November or third week in January. It does take me usually 2 months in the wintertime to meet with everybody. But I don't look at the numbers until I've got all the data compiled, because I don't need to be influenced anywhere. And this is the big number that stands out, is 41% of my acres are going to be canola. And you see that's basically a 3% increase over last year. It's not the 5% we saw from 2010, but one trend that is definitely happening since 2006 is an upward trend, and we see basically 10% more acres. That's my attempt at a straight line. But we see basically 10% more acres than what we did in 2006, which really isn't even the trend for Canada. I mean, in Canada, we've seen just about 90% more canola acres since 2006. I believe it's somewhere about 86% increase. So, but one thing it does show me is that guys are starting to stretch their rotations. And again, back in 2006, we saw this number here of wheat being basically 35% of all the acres, and now we see only 32% of all the acres being wheat. So wheat has been compromised. Basically last year it was back up around the 35-36% mark, which was right in line. We just saw a big shift. Obviously this red column is the hard red acres, and they've been going up. You see this year in my group, only 1% of all acres are going to be CPS variety. And that comes down to, I say most guys knew since 2006 coming forward. As you saw, this little green column is CPS red acres and how that's been diminishing. Most guys have seen the economics, even going through the frosty years. If we were able to get some protein out of it, we were able to extract more money out of feed wheat, because like I said, not all feed wheat is created equal. Most guys saw that starting with CPS, yes, you may get more bushels, but your best case scenario is only getting a 3 red price for it. Now this may change in the future with no wheat board holding us back or setting a price for us, but CPS has really turned into a niche market. I actually have more acres of specialty canola being Nexera in the ground in my group than I do CPS this year. So that shows you something. You know, basically, if we were to put the specialty canola on the canola, we're looking at roughly about 43% of all my acres are canola, and only 1% is CPS. So again, I think the big difference too was sitting down with guys and using cost of production now, really getting guys to think about their business as a business, running it as a business, making decisions 12 months ahead as a businessman would. When we have to start planning for budgeting, obviously you're using me for benchmarking trends, and I'm using you to find out where your business is at, and from there we can make the decisions. And there was one person I sat down with where every scenario of CPS versus hard red was beneficial for CPS, but then when we put CPS wheat up against the malt barley, then it wasn't actually competitive even to malt barley. So his acres went more into barley. And speaking of barley, that's what I'll talk about next. This is an encouraging fact. 23% of the acres basically. Oh, just hold on here a second. 23% of all the acres are basically malt barley variety. We saw feed dip down to the lowest ever in my group back in 2006. 17.8% of my acres were feed barley variety. Only 13.5% was a malt variety. And now we've seen the shift. So if you total these two numbers, we're looking basically just over 31%. Barley has come down, obviously, because we're only at basically 23% this year. Last year we were at, if you total these two numbers, we would have been looking at basically 21.3%. So, I mean, the barley did go up this year, but it didn't go much as I expected. As much as this canola number was a surprise, this barley number was a surprise. I thought it was going to be about 25% of all my acres. But nonetheless, where we've seen the big shift is guys getting out of feed barley, because again, the best you can hope for is a feed price. And this year, that would be $4 to $4.25 a bushel. And the best case scenario you could hope for on malt barley was $6.50 this year. Even with marketing throughout the year averaging $6, that's a big discrepancy for feed barley and malt barley. So again, as guys start thinking of their business more as a business, or their farming operation more as a business, doing what's right for the farm, not how many bushels you have. It doesn't matter if your bins are bursting with dimes. I'd sooner have them bursting with toonies, or have them half full with toonies, I should say. So again, that's where we see the acreage change. Now, another thing people have said to me is this, because it's my group and it's also my numbers and I'm influencing things. And while I would hope I have some sort of influence, I know I've probably been one of the bigger proponents of the difference of CPS and hard red, and CPS acres dropping to basically non-existent. And I know I've had an influence in the feed barley dropping to basically null and void, because I'm a big proponent of shooting for malt, and if we get feed, we get feed. But the total overall acres of it, I don't have very much say in. That still comes to your farming and your farming practice rotation. Now, this 41% of canola, if we tacked on the specialty canola, which is another 1.4 percent, that puts us up to that 43, and that's exactly where I wanted to be at when I started to meet with guys this year. Some guys are still at 33% of their acres are canola, but I really feel we have to be pushing our rotations more into the 40 to possibly even 50% of our acres are canola. And why? Because that's our most profitable crop. It's not even a competition. The question always is, well, then we aren't being stewards of the land for club root, whatever may be the case. To that I say, well, there's varieties out there. There's other ways you can do your due diligence. I still think you could have only 25% of your acres into canola and you could still get club root, because there's so many oil lease operators driving from field to field, and they're just tracking soil all over the place, that it doesn't matter if you really live west of Innisfail or east of Pine Lake. It could be the same operator that's driving somewhere that is moving the soil. Never mind the trucking companies that are in or out of fields all over the place as well too. So I mean, club root is one of those things that, yes, rotation has. I think rotation is the thing that everybody jumped on, that it's because of tight rotations, and it's easy to blame the guy who 1 year is canola, next year is wheat, 1 year is canola, next year's wheat, going back and forth. But I've also heard reports up in the Leduc area that there's been guys with club root that were on a one-third rotation, and there's really no explanation for it. So again, when we get into diseases, I'm very happy to announce today that sometime in March, actually 2 new announcements since the last webinar we had, and I probably will only be having 3 or 4 webinars, or 3 webinars I'm hoping for maybe in March now. but one of them that I'm going to have that everybody that is growing malt barley should be very interested in is Bill Chapman from the Alberta government. And I don't know if you guys have ever heard him speak. He's done presentations at RAR meetings before. But anyways, yesterday I was at Ag Choices in Red Deer and asked him if he would do a presentation on how to shoot for malt barley. And he also was bringing up, I think it was called, no, I'm not an agronomist, but he was talking about, I think it was stripe rust in barley and how prevalent it is and how much guys are losing. And if you have your own sprayer, that you better be spraying for it whether you need to or not. And that's something I'm going to get him to talk about because he's certain that yields are being lost all the time. So anyways, that's going to be one of them. Another webinar that I've secured for March has been the succession planning. Red Chandro deals in basically the emotional side of succession planning. And I know that's been a big topic when I sent out that survey. That was number 2 on the list for what everybody wanted a webinar on. But of course, I know very little on it. I only know what I've seen at meetings. So that's going to be another webinar that I have where Reg is just like when Cheryl took control of the computer and did her presentation on cell phones and cell phone billing. Reg is going to do one on succession planning, and Bill Chapman's going to do one on, getting the most out of your malt. That if you're going to take the time, basically, if you see the malt acres go up from 18% last year to 22.8, there's some guys that maybe haven't grown much malt before, and it's what to shoot for. And basically, what you're blowing out the window, that sometimes 70 pounds of N isn't necessary, that you can get pretty close to the same amount of yields with 60 pounds of N, and you actually your odds of getting malt barley are increased. And the timeliness of seeding malt barley, that's what Bill's going to talk about, especially with very little snowfall this winter. We could potentially have some of this stuff in late April, early May, very early part of May, which would be great because that would put us harvesting hopefully by the end of August, and just how much that helps on getting malt, especially with no wheat board around. Some of us are going to be contracted into RAR, but not everything, so that'll leave us some opportunity for maybe if our malt is coming along in July that we do a contract into Viterra because they're doing 100 cars out. So good news, with no wheat board around, we can manage more, sell more wheat and barley for cash flow reasons. But again, not getting off topic, but dealing with the acreage changes, we see a lot of these smaller columns like the CPS column, the feed barley column, the pea column. That's another one I never talked about is peas. Peas have really dropped down. They're down to basically 2007 levels, and I really think that's unfortunate. I know the guys that have gotten out of peas, they said it was more because they just didn't have any luck. But I really think with higher grain prices, we're going to see higher fertilizer prices, which we have seen through the wintertime. And growing peas in last year, 2011, this year, 2012, will only help reduce your fertilizer costs for 2013 and 14. So I like peas as a rotation. We also have a nice little home for it too, dealing with Chris in Innisville there with a color sorter now and possibly loading containers. We'll have great access to little niche markets that we can get maybe 25 to 50 cents more than what your neighbors will as well. So, but I mean, that's where the peas are at. When we get down to varieties, again, I see a lot of this canola acres. Guys are going back to more of a Roundup Ready variety simply because of weed control. And I think, again, it's one of those one-off years. I don't know if we can make plans every year because of the problems we've had in one year. But last year with all the moisture, guys only got their Liberty sprayed once. So, of course, they had a weed problem. So some agronomists out there are saying that there's these new Roundup Ready varieties, 71 something, I can't remember the numbers, that are definitely going to yield a lot more. I guess that'll be a webinar I can be hosting in November, December, and tell you guys if that's the case or not. It would be nice if there is a Roundup Ready that'll keep up to an Invigor. It's just I haven't seen it in past history. So again, that's the canola varieties. I see it more going back into Roundup Ready. So not sure if that'll affect our yields or not on the back end of things. And on the hard red side, some guys are getting out of go, some guys are getting into go. Again, if you really look at these acres, we're dropping down, so it's not necessarily that I don't see a real acreage shift in the variety for hard red. It's harvest or go or intrepid. Those seems to be the main three right now. Again, there's going to be more with no wheat board. These two columns here, the blue and the red, we're going to see more of a niche market appear, where I said we may actually get this 1% could turn into 2% of a totally different variety of wheat that we could be selling somewhere else in the world. But that, again, is in the next 2 or 3 years of columns that we'd be looking at that. On the malt front, Meredith looks to be positive. It is 4 days later, so really anything even remotely close to Highway 2, I've been telling everybody to shy away from. And really Canada Malt is the only one that wants to have some sort of contract on it. Again, I always say, let's let your neighbors grow it. If it looks like it's good, well, then we can look at getting it into it in subsequent years. Bentley came and went as a new variety. Merit 57 really didn't look very well. Meredith, the maltsters like the characteristics of Meredith, but again, it is it's one of those emerging markets. So Metcalf and Copeland are still the top two dogs, and that's the one that everybody wants everywhere. Metcalf over Copeland. Now with no wheat board in the mix, you're going to see different prices for different varieties. That is a guarantee. I will guarantee that probably about 25 cents a bushel more, maybe even upwards or 50 cents a bushel more for a Metcalf than a Copeland. Not all two rows are created equal, and any maltster will tell you that. Now with no wheat board in the picture, they can pay according to what a person's growing. And I think we'll see that in future years, not this next year coming up, but we'll see it in future years as well with the wheat. Different varieties will have different characteristics that will go into different markets, and they'll be willing to pay for it. It's just too bad we couldn't have better management at Permalux, because I think there's a lot of our acres that would be great for production contracts in the Permalux, but I don't trust the management there, and I will not deal in there until the management changes. So that could happen maybe in the future, but right now it hasn't. So that's where we sit with the acres. As you see, a lot less little columns and a lot more bigger columns. Everything's increasing. Why this is important again is looking at the canola acres going up. This will kind of give me a heads up going into Stats Can report. The only thing that might happen is canola may level out in parts of Saskatchewan, southern Manitoba, or go down, because there'll be farmers trying different varieties. Something I learned from Ag Choices yesterday, though, just from talking to non-customers, farmers in the crowd, is there were some guys that were going to be trying malt barley that only had cattle, and they were only growing feed barley variety before. So again, that's why I want to have a webinar with Bill Chapman to basically show you guys what has worked in the past, what has worked in the plot trials, to get the most sought after barley. Because again, if you're known as a farmer who gets good barley, you'll get a better price, you'll get a better contract going forward. RAR does not want to deal, they do not want to deal with certain people that only have a 50-50 chance of getting malt barley, because they can't run their business on 50-50. So that's where we're going to have opportunities with other companies, so I'm not too worried. Like, RAR isn't the be-all, end-all. But it's the same with Canada Malt. I mean, Canada Malt doesn't want to deal with some guy who has only fed his own barley to his cattle for the last 5 years and now wants to grow malt. They want to deal with a guy who knows how to grow malt so that they can get the malt on the back end. They don't have to go looking for it. So So that's basically the acreage changes. One thing I was going to bring up here was the USDA report that's coming out tomorrow. There's a big shift talking about my group's acres and now going into the USDA report. This is the preliminary, so basically here's the high for ending stocks for corn, and here's the low, and this is just an average. So this is what the trade, they want to see the number come in probably no more than a couple percentage points off of each one of the average numbers here. So now the question I know some guys are going to ask me is, where do I think it's going to be? This report generally isn't the one that will create any havoc. It'll be the one in March, and simply because since the last one on January 12th, we had 8-day holiday in China, which is their Chinese New Year, and what that does is it basically shuts down all buying and importing of grains into China. So I don't know if their exports are going to be as strong in this report as what everybody thinks they will be. And when I say that is they've had really good ending stocks, export so far since basically beginning of December, which I've posted up to the website there to show you. One other thing I want to point out is the world ending stocks, and the big number here that affects us is soybeans. I really think this number is going to come in. It could actually come in lower if it's closer to Informa Economics number, simply because they had in January, they still had Argentine beans at 50. I've heard as low as 42.5. So basically take seven off of 63, and that would be where the ending stocks, or the world ending stocks would be. So that's a very scary number, and that's why we see canola rallying a bit, but we don't see, it's very hesitant right now ahead of the report tomorrow. For those of you that we are still sitting on any kind of basis contract, when I send out my pre-report, or no, a post-report, I guess. The report comes out at 6:30 our time. I'll be on a conference call by 7:15, and then a webinar at 7:30. So by 10 to 7, I'll be sending out whether it's bullish, bearish, neutral. If it is bullish, we should look at probably, let me just get into the futures here. And this is, I'm just going to talk about canola. We should look at probably riding the market up in the morning and possibly selling. You see canola's currently trading at 5.32. Like I say, if it is a bullish report, this number could blow up $10 to $15 a ton right away tomorrow, but it may come back and only close right at the 5.35 level. Basically, nobody's been buying the rumor right now, so the rumor is that it's going to be a bullish report. So they could be buying the fact, and that's where it'll be an explosive buy up in the market tomorrow, but then it'll come down. So I'm going to be around the phone all day. Like I said, I'll be phoning some of you that have basis contracts, or if you're looking at the futures here, we will be talking about that as well. Give me a call. All it'll do is ring busy if I'm on the phone, or text me and say, hey, as soon as you get off the phone, give me a call, because it could be that important of a market. I'm not sure it's going to be bullish enough that, like I said, if we do get a $10 to $15 a ton rally on canola, that it's going to be sustained, it's going to put us into a new stratosphere. There's going to be profit taking because it is a Thursday going into a Friday, and it'll be one of those things that will be, wow, the weather wasn't as bad as what they thought in Argentina, or the yields aren't going to be as bad, or something like that. So again, 20 hours ahead of the report, I'm just prognosticating what I think is going to happen with the report numbers, and I will post actual numbers of the report on the website, and probably have a little video going through them as well too. So we can talk about that. I might just save it for the weekly as well. So back to the acreage changes. Is there any questions? I'm just going to unmute a couple of you that I was getting feedback from. So if you guys got microphones, you can yell out your question or ask me, and any of the other people on the webinar can always type it in the bottom or text me a question. So any questions?
I have none.
You probably just want to get out on the golf course. I know I would. I'm jealous right now. But that's why you pay me to be up here while you're down there, right?
Right.
Yeah. Okay, well, if there's no questions, I know some of you may have joined a little bit later, so I mean I will have the recording up on website so you can catch the first analysis about the canola acres. But again, just because my group's canola acres are going up, I don't know if that's going to mean necessarily that all of Western Canada will, because I still can't see a 3% increase in all of Western Canada. It would just be hard to fathom, actually. So, especially with the wheat board being out of the mix as well. So, but it will be posted up there, and that will do it for this webinar. The next one I'll send out when it will be. It'll be 2 weeks from today, and I'm not sure what I'm talking about yet. So we'll see what the market gives us, and I'll let you guys know ahead of time. And like I said, in March, be sure to be watching for Bill Chapman talking about getting the most for your malt barley, and Red Chandro talking about succession planning. So thanks for joining, guys.